When the chips are down, betting on Vedanta's Anil Agarwal has historically paid off. However, with the current tailwinds back in the Vedanta group, how does he see the future unfolding? Let's welcome the Non-Executive Chairman of Vedanta Limited, Mr. Anil Agarwal. Thanks a lot for speaking to us here on CNBC TV18, Mr. Agarwal. Well, before we get chatting on the group, I wanted to get your expectations from the newly formed government, particularly with the budget in the next 1 month or so.
It's not me. The whole world was watching. The largest democracy and largest voter has casted peacefully. This has shown to the world how the election happened, how the democracy works. So not me, everybody was very pleased the process which was run. And the expectation is tremendous. The India is in the sky. Everybody is looking forward to invest in India, work with the India, connect with the India. So it's a great time for us.
And you're quite optimistic on the prospects for the next few years. And as we say, the next decade will belong to India. But let's focus on the metal space. And everyone's talking about this melt up in the metal cycle. Which stage of the cycle are we in? The early stage, mid stage, or late stage?
We are on a super cycle. We are in a super cycle. If you see, no major natural resource production has come up last 5-10 years. And this is the one which is a huge gap. I'm only thinking because especially in India, where everybody is finishing steel, aluminum, copper, zinc, every metal. But we have so much of resources. In terms of demand, there is a double-digit demand. But in terms of developing the resources, is very small, a single digit. So we have to be very focused so we don't have to import our raw material.
All right.
But the cycle is super cycle.
Let's focus on your company then, Vedanta Limited, Mr. Agarwal. You have put out this ambitious guidance. You're talking about $10 billion of EBITDA. Could you tell us how confident are you about getting there? And if you could fill us in with the timeline as well.
You know, this kind of company does not come by in the world. This kind of portfolio, because these businesses are very difficult to replicate or to start. It takes 10 years, 8 years to start, and require billions and billions of dollars. So as far as Vedanta is concerned, we always remain focused. We always remain focused. We always remain either on the below the ground. We always focus on below the ground. When everybody was saying not supporting us, even at that time, I remained focused below the ground. And even today, now, everybody is talking about that India has Sone ki chidiya. We have enough resources. This is the time because we can use today's technology. And using today's technology, we can be on the highest level of protecting environment.
So you continue to remain confident about that $10 billion of EBITDA, right?
$10 billion is if you look at, we are the largest producer of zinc, silver. We are the only people in India doing the largest recycling of our slag, recycling, which is the most environmental friendly. So we are very, very, very confident. Aluminum, we are the largest producer, 3 million ton integrated, everything. If you look at our iron ore, we are going to produce 70 million ton of iron ore. If you look at our oil and gas, I'm so excited about oil and gas. We have offshore, we have onshore. We are the people who are producing and started exploring and the drilling program in the Northeast, especially in Big Boy and all the Assam area. So very excited about oil and gas. Each of our assets are a trophy asset.
Okay.
And each of our assets is the future of India. As you know, we are in renewable energy. We do the transmission. We produce largest optical fiber. We make our own glass.
Yes.
transmission. So we are a range of business on technology side as well as natural resource side.
Now, you've talked about all these businesses, put it together, but also what the street is looking forward to is the demerger of these businesses. Could you tell us the timelines and have approvals come through?
Yeah, it's all done. It's all, we have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also.
The other focal point, Mr. Agarwal, is the steel business. I'm aware that you're in conversation with various buyers, and maybe in the next couple of quarters that should get closed out. How sure are you? In the first half of this fiscal year, should we see that steel asset getting sold at a good valuation? You want to give us a hint of the valuation you're looking for?
See, first of all, on the demerger, it was absolutely important because each of our business is a independent business. And my vision is to time to come, each of the 6 businesses will be as big as Vedanta itself, because the huge demand and the demand is double-digit growth. So I'm very excited about to create value for my shareholder. Each of my shareholder will get, if he has a 1 share of Vedanta, will get 6 share of demerged company. So that was on demerger, and that was the right thing to do, making a very strong with the management. As far as the steel is concerned, steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. So this is the best location for anybody to start production of steel. Very clearly, our Prime Minister has said that there will be 300 million ton of steel production. And India is at the moment producing only 120,000 ton. So the huge demand supply gap in steel. So this is the one thing which is a brownfield, which can produce 20 million ton of steel. So we have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. So we are 100% sure that if we get $1.4 billion and get not the distress sale, if somebody has a vision to produce, take it forward, we will look at, and if we get a price of $1.2 billion per million ton, we may consider to take the view.
All right. So your ask is that per million ton, you want around $1.2 billion. Are we getting that correct?
3.5 million ton. 3.5 million ton.
So what is the total valuation you're seeking for this 3.5 million ton plant?
Yeah, around 4.5.
4.5. Okay, all right. That appears to be a tall ask. And how confident are you that you see, this getting closed out in the first half of the fiscal or sometime during the fiscal itself? Because valuation-wise, it's quite a tall ask.
No, we are very comfortable. Every of our shareholders want us to be in the steel business. We are already producing almost 2 million ton steel in Goa. So both put it together, it will be 5.5 million ton. We have strategically decided not to be in a steel business or become very big in the steel business. So we are getting very good response internationally and nationally. This is a very good, if you look at, this is the norms of the price, 1.2 billion, because the assets are not available. If anything comes, we look at, otherwise we'll keep expanding our plant.
Well, time to slip into a snappy break, but we've got lots more to chat on with Mr. Anil Agarwal. Stay with us.